What's up, hackers? Welcome back to another episode of Hack Crypto, where we hack all of our education around Web3. If you guys are brand new here and you love everything that is Bitcoin, slap a like on this button, subscribe with the notification bell on. In this episode, I'm going to be going over Unchained. So after BlockFi collapsed, I'd even used it for collateralized loans in the past. Luckily, I didn't have any balances on there when it did collapse. I decided to do a deep dive search on the best possible Bitcoin-backed loan programs out there, ultimately ones that had the lowest risk, and if there were options for self-custody. There were a few people out there, like a sovereign company that I think I've had on the channel in the past, where it's very decentralized and it's a little bit chaotic, but Unchained was the best option that I found. It was legitimate, it was based in the US, and ultimately they have a 40% LTV product. The way that Unchained is approaching this is quite unique, where they're doing it almost like a triple sig approach, where they have me holding a key, they have the company Unchained holding a key, and then someone as a third party that I choose can hold a key to the vault to make sure that the Bitcoin that I'm sending is going to the correct place. This three-way sort of signature allows for that optimal security, and the custody risk is lower because with rehypothecation, if I'm pronouncing that correctly, what happens is with BlockFi and a lot of these other lenders that popped up and then quickly exploded was when I send Bitcoin to a lender, what they'll do is they'll lend it out to a borrower and get interest payments from both. It's double dipping because I'm repaying it as the person that put the collateralized loan up, and that collateral is on their wallet. They are then lending that out to a borrower who's then paying them interest. So they are getting interest from both ways. Now, what happens when that borrower defaults? There's a whole chain reaction that happens. And many times, me as the actual person posting the collateral, I don't even know that that rehypothecation is happening with that collateral to a borrower behind the scenes. So a benefit of Unchained is they do not do that. They do not do rehypothecation. So this is like a pseudo-centralized version of DeFi for collateralized loans. I really like it. So what I'm going to do in this video is go through some pretty key aspects to this. And I want to go through some of the different features that Unchained has, because they have some pretty interesting ones around their vault and the ability to put the Bitcoin on there as collateral where you're still custodying it. And I wanted to talk more about their origination fees and their interest rates, their APR and things like that. So I'm going to dive onto their ultimate guide to Bitcoin loans, show you guys a little bit around the site because I have an account on there, and just kind of deep dive into this. This is not a sponsored review. I just love products like this that come out, and they're a new take on collateralized loan because it is a multi-custody kind of co-custody option for people. And this is what I was looking for. I was trying to find something after the BlockFi fiasco to figure out what it looked like, and with low origination fees, because often the origination fee is the kicker in the background. BlockFi was very expensive to do that. And then ultimately people refi after 12-month terms, and that is even more expensive. So you have to factor in all the different costs of capital that go into these types of loans. So from the dashboard, you can see here that you upload a key, which is from your hardware wallet. You create a vault, and then you fund the vault. Now, two things I want to highlight here are that you can set up a Bitcoin IRA, which is extreme. I love that. And it is a beautiful example of creating new instruments for people. And the next one here that I wanted to talk about is the inheritance protocol. So this is a whole industry that's going to exist over the next 10, 20 years, where you want to be able to pass your crypto down to loved ones, kids, all of that. So I really like that they're doing this approach, because when you have really savvy financiers and people that are hodling Bitcoin right now, they're thinking this way. People think long-term when you're building wealth. So when you have IRA account creation, when you have inheritance protocols set up, you are targeting a very specific savvy group of finance individuals, which I really like. So you have your price, of course, here, and your portfolio where you create your vault. You have the ability to upload a key from your private wallet, your hardware wallet, and setting up a vault for the multi-sig approach. You can take out your loan here, obviously. And I really like how this is displayed. It's easy, very similarly to BlockFi, and this is going to just take all of BlockFi's customers, previous people that really leveraged it, like myself, and really just enjoyed using it because this is such an important instrument. And the fact that they're doing it in like a multi-sig way without rehypothecation to anybody is just a beautiful example of solving a problem where people want to unlock that value. So really easy to use, seamless. This is an account I created for the demo purposes. I have another account, but I really like how it's laid out, easy to use, and these two products are what I wanted to mention. Now, last but most certainly not least is your expertise onboarding. So they do allow you to work with an expert with the hardware wallet and the multi-sig aspect because this is complex. Most people aren't going to want to touch this with the multi-sig aspect because it is technical, it is a little bit of a learning curve, but there are millions of people out there that hold some Bitcoin that they could borrow against. And I really like that they have, a trading option here, but ultimately the focus is on the long-term wealth building. There's 4 main pieces that people usually use these types of collateralized loans for. Real estate, this is identical to a HELOC, where on your primary residence, you could pull out a HELOC at 60, 70, 50% loan to value when you have equity in your home. Very similarly to Bitcoin now, this is an incredible option. And this is part of the reason that I started researching this, because if you're a long-term hodler, you are going to want to unlock some of that pressure on your stack and you want to invest it. So real estate is a great way to move that money around and you're not actually liquidating any Bitcoin. So there's no taxable event taking place. You are literally borrowing against it, putting it as a down payment on a rental property or buying the property outright. Real estate is one. Growing a business is, of course, a very close second to that, where you could buy a business on Flippa or one of these marketplaces out there. You could go on there, borrow against your Bitcoin, and you could pay for a business outright. And businesses are going to, sell at 5-6 times revenue, really depends on the business, but ultimately you could make your money back pretty quickly, repay that loan and do it again, and kind of stack up businesses if you want to do that. Now, taxes is the third one that I wanted to talk about. This one is usually a last resort, I would say, where if you owe the IRS or you owe any taxes in your state or something like that, you need to make sure that you're strategizing for that early on. So this would be a backup plan. In the event that you owe taxes, you need to not get on a payment plan with the person that you're paying taxes to, the entity you're paying taxes to. You need to make sure that you're ahead of that. So this is a backup to borrow and pay taxes and get on a payment plan on your own terms, basically with Unchained. Last one is debt consolidation. Now the interest rate on Unchained is like 14%. Depends on the term and the amount and everything like that, but ultimately your credit card debt is going to be 20% plus. And we've hit a record amount of credit card debt here in the US. Personal credit is over $1 trillion. It's incredible and sad at the same time that interest payments is at an all-time high on credit card debt. So using something like this for the Bitcoin hodlers out there to consolidate that, wipe out that personal credit issue and paying interest to these massive banks at the all-time highs to make sure you're in control, because this is a very, very good example of taking control of your own finances, because those 4 that I mentioned are just, 4 of maybe a dozen different use cases for this. And those are lower risk ones. I know a lot of people out there use DeFi collateralized loans to trade and make some sort of kind of crazy flash loans and stuff like that. But this is the more conservative side of things. This is the real life. This is the realistic way of approaching taking a loan out and using it for good. I wanted to mention the mining, Bitcoin mining. I have heard of people doing this, miners and many people doing this for buying additional rigs. And this is usually done in a bear market because setting up, getting ready for the next run is usually how they do this. And the 2 to 3 multi-signature approach that Unchained is doing, I think attracts a lot of the kind of decentralized junkies out there that want to get into mining. They want to experiment a little bit, and borrowing against some of your stack to actually get more rigs is a beautiful way of doing this, because you got to use fiat to purchase And it is a very clever way of levering up and buying more. And you can produce these level of returns, which is a very valuable aspect to borrowing to buy more rigs. Because let's say you borrow to, buy a business, but the business only performs at about 15 or 20%. You're only going to make about 5% based on the interest rates that I just went through. But let's say in the next bull run, you buy some mining rigs, that could be 100% ROI, 200% ROI. I've heard 400 or 500% ROIs during bull runs and things like that. Just crazy numbers. So it is higher risk, of course, with everything. The higher risk, higher reward. At the time of recording this, I'm going to jump into the APRs. These are likely to change, and it is very contingent on the numbers that you're putting into their calculator. I'm going to link to Unchained below so you guys can check that out. But for a 3-month term, you're looking at about 12% interest rate with a 1% origination fee. What does that mean? When a loan is made, you need to pay an origination fee. And that is a fee that activates the loan and pays out all the people that are involved. If you've ever bought a house, there are origination fees paid to your broker that are, putting the mortgage together, getting all the documents in order. The real estate agent is taking pieces of different fees. Everybody's taking fees. And origination fee at 1% is pretty solid. The principal amount at $10,000 on the base level is 16.16% APR. And your total cost of the loan held for 1 year is going to be $1,600. So what you need to look at is your cost of capital. Whenever you're taking out a loan in any form for any project, any part of your life, you need to look at the cost of capital, what it's going to cost you to borrow the money. At this juncture, it is crazy expensive across the board. For mortgages, it's 7.5% when they were 3.5% a year ago. There's a lot of cost of capital spikes going on right now. So term at 6 months, about the same across the board. APR is 14%, and your cost of capital is about $1,400. And the 12-month term is 12% interest rate, 1% origination fee, and looking at about 13%. So APR goes down as your term goes up, and your cost of capital goes down as your term length goes up. So the shorter term is going to be higher cost, which makes sense. A quick LTV example here. For a $10,000 loan, you would need to post $25K worth of Bitcoin. And this is just a basic LTV math calculation here, where when you get lower on the LTV, like you're 20, 30%, this means that you're depositing more Bitcoin. So to reiterate, once again, if you want a $10,000 loan, you got to put 25K up. And this is just a basic way of approaching LTVs and how you want to do it versus the collateral to principal ratios. Now, when is the right time to take out something like a Bitcoin backed loan? At the bottom is when you want to take it out. You don't want to take it out at the top, because then the price comes down and you're going to need to put more collateral. You're going to need to post more collateral up. And this is something I can't stress enough. This was what happened with BlockFi. And you need to be able to, especially if you have a low cost basis on all of your crypto, especially your Bitcoin, you need to make sure that you're doing it at what you believe is the bottom, and you believe that the price is going to go up. And this is not financial advice whatsoever, but ultimately, if you hold a significant amount of Bitcoin and you have a low cost basis on this, that implies a lot of taxes. So this is a very good way of borrowing against it. And if you believe the value is going to go up, you're going to save a lot of money. So Unchained began issuing loans in about 2017, I believe. And with such a scarce and appreciating asset like Bitcoin, it is a gold mine to be doing this. Huge whales of Bitcoin holders that need to unlock their Bitcoin to do different types of deals like home improvements and just all sorts of basic things, unlocking that pressure. I've done a previous video on NFTFi where people are unlocking value in their NFTs. And this is similar with Bitcoin, where people need to unlock it. And there's so many different values that come from not liquidating your Bitcoin and borrowing against it. And there is always going to be risk associated with it. So that is it for this video. I hope you guys like it, and smash a like on this button. All the links will be in the description below. Once again, not a sponsored review. I just really like products like this that give the power to the borrower. And if you are collateralizing loans, definitely leave a comment below. Let me know your thoughts on Unchained and any other products that you've seen, like Nexo and some of these other ones that are centralized, because this is the most decentralized pseudo version of a centralized lender. So I'm really curious to know your thoughts. And that is it. I will see you here on the next episode of Hack Crypto.